What is going on, everybody? Welcome to the weekly closing, not just the daily closing, the weekly closing. The daily. Good to be back, back in my trading terminal. Although I sat there, watched the markets all day today, and it was hard just to keep my eyes open. All right, let's take a look at just kind of high time frame stuff first. What up, Edmund? What's up, Swing It? We got about 12 people today. Hopefully we get a little bit more on. All right, let's take a look here. So we're going to look at XBT. I'm going to do open up here. So let's take a look at, actually, let's do BTC USDT. Let's do actually Bitstamp just so we get a little bit more of a higher time frame. So if you saw my last analysis, you'll see in this triple triangle analysis, these each have these strong impulses off the bear market low, and then usually they'll consolidate for 1, 2, 3, 4, 5, 4 or 5 months, and then they'll start resume their rallies. Same thing here, impulse off the bear market lows, 1, 2, 3, 4, 5 months, and then they resume their rallies. We had this impulse off the bear market low, consolidate 1, 2, 3, 4, may have another month over here. Hope not. That would be absolutely torturous, but it is possible. And so the most important thing is not to get lulled into thinking that this market is over. A lot of people are calling for new lows, calling for an echo bubble pattern. I just kind of trade historical analysis, which is basically it's done this 3 times in the past. Every time it goes into the start of a bull market, it continues on the upside. I do know a lot of analysts that are saying that the rally is over, though, and I do take their opinions pretty seriously, but we do not have any sort of an invalidation yet, and I'll show you what I mean by that. So this is the monthly. We can bring up all of our moving average trends here. Oops. And we're above the monthly 20. We're above the monthly 50. The weekly is a little bit easier to see. We're above the 20 MA weekly. In 2017, we actually tested that 20 MA weekly several times. You can see here we grinded along it on that triangle. That was that initial impulse, and that's the first triangle that I wrote about in that new analysis. So we had this triangle extended pattern out here. Grind. Had a couple stop loss hunts down here. That looks like liquidity filling longs right here. See those wicks? That's liquidity filling longs. And what you can also do is you can also take a look at volume. And volume's a really good metric for institutional level buying and selling. So you can see here we had a massive buy spike to take us into this early 2016, 2015 move. And then basically dead volume, and then volume picked back up in through here. You can actually see that it went dead here, and then we actually had buy volume that spiked us out of that triangle. And what you can see is we had that same level, we had this nice spike in buy volume, and then dead. So this may take even a little bit more, and then what we may see is some nice buy volume that kind of kicks in. So on the weekly, if you remember my other analysis where I talked about the buy zones, what we're looking for is a tap on this 53 RSI zone. We actually didn't get it up here. That was the 55 zone. So we're looking for a tap on that 53.45, which we may not get it right now, but that's what I was looking for specifically. So weekly, again, we're going to get rid of all these here real quick. So we're above the 20 MA on the weekly. So that means we're still bullish. And really, we're going to go through this again. We're really just consolidating along the previous weekly resistance and weekly support. And those weekly resistances and supports, as you guys know, do line up with our Fibonacci levels from swing high to swing low. So see how this top weekly resistance is here? That's the 50% level. See how this swing high, swing low here? That's the 38.2% fib level. So we're just literally bumping into the top, bumping into the bottom, kind of ranging, just like we did back here, but this is a little bit more extended and consolidated. And so, you know, just high time frame, we're just ranging, waiting for a range low to break, range high to break. And so what we want to see is, you know, without getting too crazy, you're stuck in the weeds, you know, we can look at the 15-minute, 30-minute, hourly. We just want to see a weekly close below here or a weekly close above here. And that'll just give us an idea of where this trend's going to go. Just from a high time frame perspective without getting too caught up. Now we do have a couple of trend line supports. We've got this one here. Whoops. See this a little bit better. So we've got this one, which is basically we're touching right now. So if this breaks, that might give us a little bit of a clue as to what the market's going to do. But, you know, these trend lines, they usually like to come back to them, especially these diagonal support lines. And we had a couple of them. We had we had this one here, which we did bounce off of twice, and then we attempted to close back above it, but then we closed below it. And then we even had this one here, which had a similar feel and style. And if we look at the daily, you'll see that a little bit better. All right, so the daily we have. Let me get rid of these real quick, and I'll show you one more time. Okay, so we've got this one here, which we're basically kind of sitting on right now. You can see we're, you know, correlating again on this, or, you know, riding this trend line. Then we had this one here, which, you know, it tried to hold that trend line, broke through, came back. Not super accurate on that one, but this lower one has a little bit more of a promise to it as far as like holding. All right, so we've got our weekly trend lines, which is the 50 fib, 38.2 fib. Okay, so let's take a look at our daily triangle slash flag slash boring ass consolidation at the top here. So just from a Fibonacci level analysis, we're just going to get rid of this. We're going to get rid of this. We're going to get rid of, okay. So top down, we came up, we hit the 61.8, which was here. Bitcoin loves to do that. You know, we tapped down, 61.8 retrace, came down, didn't quite make it to here where I was looking for, that 9,000 zone. So we got front ran a little bit, meaning money came in before this level was reached. Got front ran, came up, tested the 38.2, rejected, tested the 38.2, rejected on a swing failure. And then now we're basically holding this 23.6 level. And so what we really ideally want to see is a higher high. Lower high, lower high, lower high, lower high, lower high, especially candle closing. So here, what we want to see is we want to see a break of this pattern, and we want to see a break up and a close outside of this trend line. But ideally, we want to see a higher high be made because all we've had are lower highs, lower highs, lower highs, which are not the most fun pattern to play, especially with how choppy it's been. The other aspect is, as everyone is pointing out, everyone on Twitter, we do have a descending triangle here. But I want to show you something real quick. Bulkowski, he's basically like a statistics guru. Descending triangle in a bullish uptrend. I don't know if, okay. So Bulkowski, he said descending triangles. Let's see, trading tips. Let's see. Where are we at? Descending triangles in an uptrend, bull market results. Throwbacks, pullback rate, average decline resistance, break even failure. Basically, they break out, I can't even find the statistic here, but they usually break out 63% of the time to the upside. Oh, right here. If price rises into the pattern, it breaks out upwards 63% of the time. So that's a descending triangle in a bullish market. So, you know, we've got a 37% chance that it's going to break down. So I just play statistics. So I think that, you know, ideally we're looking at a break to the upside. And we're currently consolidating kind of at resistance here. I will be looking for a retest of this lower, you know, 9,900, 10,000 level, where I think we can get long for this last move. I don't know if we're actually going to break down and touch down into this 9,400 zone. It's possible. We've got this kind of key daily support here that acted as a lot of support. We saw wick. We may come all the way out and fill out this triangle completely before we see kind of an upside move. But we can do two things. We can short this resistance, or we can long this support, or we can long this support. We can also fill 50% of our position here at 10,000 and then fill 50% of our position here at 9,400. Look at our inverted chart. We know you're bearish, bro. So we've got 10,000 and 9,400. And so if we can get a fill here and if we can get a fill here, then that'll give us an average price of around 9,700. And then we could set our stop below here, for a push and a break to hopefully out of the upside here. And so if we had an average entry price here, that would give us a stop loss of about 8%. We also have this top line support here, which also does line up with our gap that we have on the futures market, which we're going to take a look at in a second. So we've got a lot of things to think about. The most important thing is, just not trading until it's clear what the hell's going to happen. Otherwise, you can get chopped up. I mean, you see wicks like this. They take out short sell, or they take out long seller. They take out short sellers, and then they fill up longs. They come down here. You try and short here, and they come down and they take out your short stop loss. Your long stop loss. So we've got a lot to think about, and it's mostly just consolidation. In high time frame. Short sellers and long sellers getting squeezed out of the market. Now, open interest is currently over $1 billion. Every time open interest has gotten to $1 billion, this is what we see. Massive rejections and typically bearish sell-offs. So that is something to keep in mind. We may see a bearish sell-off back down to this 9,400 zone. And then from there, it's, we could consolidate even further out, and then we're waiting for a breakup or a breakdown, or maybe we get a breakup and then a breakdown and then move bullish trend. And that way, we inflict the most pain on the market. Now, we do have a couple catalysts coming up. We've got the backed futures. So we'll just put this in our little chart here. And those go live September 23rd. And what do you know? It takes us right to the end of this little triangle here. Is this a sell the news event like the futures was? I don't know if you guys remember when the futures market came out, but it was basically right here. Futures went live like 20, no, actually future, yeah, like 17th, 18th, that's when the futures went live. So is it an event like that where, super, super hype and then it just, kills us afterwards? This is a little bit different futures market. This is a physically settled Bitcoin futures market, so it's a little bit different. I'm not currently in a short or a long position. This is just the average true range is down to 0.25%. It's not even worth it. Actually, better market to trade has been actually options. So that's what we're looking at overall. We also have this lower support trend line down here that we're watching, which comes all the way. We've got 1, 2, 3, 4 touches, 5 touches. So that makes a valid lower support trend line, a little bit more of a symmetrical triangle here. Horizontal SR levels are a little bit more important. You can even see on the VPVR, which is the volume profile visible range, that we are at the max volume level here. You always want to change this to 200. So this has had by far the most volume since this 8,000 break. But if we do break this down here, then basically that's our next level of support that has strong volume, as well as this 8,800 level that I marked off right here. So that's what we're watching for. This is that weekly support, weekly resistance, and then, looking for a break up or a break down. We're kind of mid-range right now. And one thing you can always use, we're going to clear all this. One thing you can use that works incredibly well is something known as the pivot point standard. This gives you both the pivot level as well as targets and supports. I don't like the standard. I like the Fibonacci one. It's a little bit more historically accurate for me. So you can see here the pivot came up, hit that target one perfectly, came down, nearly tagged that S1, and then came right back to the pivot. And this kind of goes back and shows you all the different pivot points that they've had. But what I'm watching for is a break out of this topside pattern, and my first target will probably be this R1. Take profit. I have 11.3, which is a little bit earlier, but yeah, so ideally we can get some sort of a position here sometime soon. If you guys remember, we did short back here. We did long over here. We took profit around, I don't remember, 10,000. And then we shorted the 10,900 level, and we took profit at 10,300. And we've just been chopping ever since. We haven't taken a single position since, and there's good reason for that, mostly just because it's chopped. Okay. And he says he wants me to look at the inverted chart. Okay, let's take a look at the inverted chart. All right, let's take a look at the daily. And it looks like, let me get rid of my pivot point here. Okay, it looks like we came down, retraced, found support on our 61.8. We currently have higher lows forming. So we're just consolidating, same pattern. And it's really just, again, this is a descending triangle into a downtrend. Or sorry, an ascending triangle into a downtrend. So the previous trend was down. Sideways correction. I usually look for an impulse to the downside, which is bullish. I know that's not what you wanted here. But you do have a similar pattern like this where it kind of came down. It looks, similar to this inverted pattern here where it broke to the upside. Actually, these look really similar. This is like a mini version of this. So maybe we see a breakup. Again, as I said before, I don't try to predict the rain. I just wait till it starts raining. And what that means is I just wait for this pattern to move, right? If you would have just waited for this breakout here, you could have shorted any point in here and still been very, very profitable. We had a 50% decline. So again, you can short resistance or you can long support. I guess in an inverted chart, you can long support and short support, long resistance, long support. No, this is an inverted chart. Let me invert back. Fuck with my head.
It was close.
So we can long support or short resistance. So we're at resistance here. So this is not a bad place to take a short for a breakdown here. But obviously you can keep your stop loss nice and tight. And if it breaks up, then you can buy the retest of this upper trend line. And if we get a massive candle, then we'll zoom in down to the 30-minute to find a good entry. But the 30-minute has just been gnarly, man. Just all over the place with wicks. We do have a nice solid consolidation going on right now. Very, very tight. Very, very, getting close to a move here. None of these are super valid, 2 points, 2 points. But it is consolidating really, really in a very, very tight range, about 2% range. So looking for a move here pretty soon. Otherwise, we're probably all going to go grow tired of boredom. But this falling wedge, kind of sideways action right now. Nothing too straightforward as far as which way is this going to move. But let me take a look at my moving averages on the 30-minute. Yeah, just a nasty little vortexing here of the moving averages. We are holding this 200 MA on the 30-minute though. So that looks pretty good. If we can hold this 30-minute 200 MA and we can break back above here outside of this consolidation, looking pretty good. But overall, I think 10,400. We'll probably get that. We'll probably do one of these 10,400 down to 10,000 and then shift the rally. I was looking for a bit more of a double bottom type action here. So that's kind of what I'm looking for is maybe a triple top on this, a push down, take out some leveraged longs because funding is favoring shorts at the moment. And then we get that 10,000, 10,100 buy-in, and then we push up. So if we can get up to like 10,350, 10,400, I will look for a short into these lower levels, and then very tight stop. I'd probably cut it at like 10,500. And I may put out a trade signal on that if we can get up there. All right, let's let Shingus give us his thoughts.
Well, I mean, you heard most of it. I agree with the analysis is good, right? So it's all things that we look at when we look at higher time frames. For me, I look a lot on structure, Fibonacci, historical levels. So weekly chart does look good in any in any analysis. If you're just going to look at structure and patterns that are forming, it's very easy to see when you zoom out. Say, okay, we hit a high, we hit a low, we hit a lower high, and now we're kind of forming a bit of a triangle here, right? So that would be continuation to the upside, typically speaking. Um, we had this that we put on here. I wanted to go over this again. We talked about this last week. This is the same deal, right? Nothing really changed. We're confined to a pattern, no matter what you want to call it, whether you want to call it descending and do something like that, or you want to call it a symmetrical, or you just want to call it a wedge. I mean, whatever you want to call it doesn't make any difference. What it's doing is it's making lower highs and it's painting higher lows, although those higher lows are only on wicks. The more substantial meat is coming from the body closes, which we talked about last night, about how important the actual body is on something like a daily, because everybody is focused on that one time. You have 24 hours to get a statement out there, and that statement is printed by the Bulls and printed by the Bears, sort of who won that day and what you can look for in the next day coming. So when we had this up the other week and we were talking about it, we have a wide range that becomes more narrow. So it becomes narrower and narrower and narrower and narrower. And we're sort of at that point where there's not a whole lot left until we hit the apex and there's just no more pattern anymore. Um, Typically speaking, if you're coming from an upward trend and you lock in anchor one, and that's sort of your first point, right? If you drop down and then you make a series of 3 points to the upside, 3 points to the bottom side, that would be your breakout is the next move, right? Essentially speaking, that's ideal. So right now we're coming down. If we do follow this pattern, we're looking for a touch somewhere in the 94, 9500 zone on this next coming week, right? That would land it right here. And if that's the case, then you could break at that point or you could break on the next week. As you get closer and closer and closer to the apex, the pattern itself loses quality, right? A pattern like this should break between 50 and 75% of pattern formation. After that, the quality or the degrading factor of the pattern becomes more and more. So the quality becomes less, and then you don't necessarily look for that full on, pole like structure for the breakout play. But when we had this earlier and we looked at it, we threw our actual move up, right? It'd be an 86.96 move to the upside, pound for pound, dollar for dollar, right? Which brought us right to our weekly close on all time high. So I thought that was, that's some fascinating stuff right there. I always like that look, right? When we take a look at um, the other chart, right, the main chart that we do our dailies on, we can see that same zone, right, that we've been hovering in for the last 2 weeks. And that top side of that purple box, right, is all going back to that original 14K miss. And that's all the way up here. So that original miss is what caused us our first anchor, which then gave us our second anchor after painting a low and a swing fail to the high side. So another lower high. From there, we dropped back down again, found support, pushed up. And again, we talk about this every night. It's the same line that has caused us these rejection points time and time and time again. So another rejection level is no problem, provided that we have some sort of support on the downside or something to at least look for. And we do. Local side 236 is sitting right here, 10,189. You see that every morning. You see that same number. That number won't change. That's based off of the local high and the local low. So we tried it the other day, 3 days ago. We got rejected. right? Push back up into our little support zone, which you could see how many times this price got rejected and came back again for support. Now we're sort of dancing all over. It's becoming a little bit more abused. We got a lower level support that's creeping in again. If you look back to all of these times support was hit and it protected price from closing below it, that's what we're looking for on this zone. So when we approach that level, it's the same deal. But all of these are just little bumps in the road, right? These are just little areas where we could see some sort of activity, whether it's going to be a big buyback or whether it's going to be a big sell-off really doesn't matter. The idea is that you want to see something happen. You want to see a reaction. You want to see people move to the price. And if they all move to the price in unison, then you have momentum. And if you have momentum, then you can form a trend. You can form a trend, then you could trade within that trend. Coming back down a little bit further, you got this longer level over here. We tested it a few times on giant wicks when we were pushing back down, but this is an area that's going to be a focus if we push down to those levels. And then beyond that, we're sort of wide open. So we do have some MAs that'll creep up and start to help us when it comes to support. That's the 100 EMA right here, is this pink one that's riding just above that zone. Now, when we get to our longer support all the way down here, right, the 93 support, 93.33 down to 90.78. This encompasses now the 21 weekly EMA, which is sitting at like 92.25, give or take, right now. That's also the bottom of this newer trend, right? So you're starting to get confluence with some other things in there. And then, of course, you have your weekly support levels down here. And when you start creeping into the 94s, say hello to our old friend, the 382, right? That's that orange line right here. That 382 is from, that's the one Jacob pointed out before. That is your all-time high right here down to your local low. So that's your 382 right here. That's that 94.41 level, right? Creeping on the upside is that 11.394 level. But again, for that to happen, we need to break some key things here. And the first thing to break is going to be that swing fail. That sort of has to happen. Right now, it's being stopped out by the 100 daily. It tried earlier in the day to hit it, and it just couldn't quite make it. So I got a feeling that we're going to close this candle out in the next 2 minutes. It's clearly going to be below this support zone. So this is going to turn to resistance. Now we're ping-ponging again between a resistance zone and a support zone. Now this support zone will be front run by the 236, plus you got the 20 MA sitting right there as well. The only thing kind of propping up price at the moment is that 9 EMA, and that's that little black line. It's not even doing that good of a job right now. It's just barely holding it up. There you go. We just got the move right now. 10.315. So to the dollar, we're holding it. And that's what we can see. But just like Jacob said, you need to find a way, right? It has to do something. It could go sideways for another year. That doesn't bother me one bit. We just won't trade Bitcoin. We'll trade other things, and that's okay too. But what we want is a clarification out of Apex, right? We need to either break a low side or we need to break a high side. At some point, the pattern needs to change. So you're either going to make a higher high instead of a lower high, or you're going to make a lower low instead of a higher low. And we're running out of range, right? We're just simply running out of range. And so that's what we're looking for, a clear identification of something. It's either going to go up or it's going to go down, but up or down within 2, 3, 4% doesn't really mean anything. We needed to actually push past a previous structure so that we have an idea of what has failed. So we talk about like you ride the trend until the trend fails, right? Or you continue to buy the dips until it's invalidated. This is the same deal, right? But except it's the opposite. You don't have anything clear. You're in the sideways market. So you stay sideways until you've either invalidated your downtrend or you've invalidated your uptrend. Because you're making higher lows with wicks, it's at least something to look at. Even though base support body level is about the same, you're kind of floating around that 94, 95 zone. right? You are attempting areas down below. And although these might be some stop hunts, I don't think all of them are stop hunts. So it's something to at least be aware of. People are trying to push it down here because there are people trying to buy it
All right,
down
we
here.
just got a daily close.
Nice.
I'm gonna pop over, take a look at it, and then I'm gonna get my daughter to bed and come back for the kind of do the full market. Okay.
Love it.
So our daily close was absolutely nothing to write home about. We're basically really pinched in between the 50 MA and the 20 MA. Trying to decide what's going to happen there. If we take a look, let's take a look at the Bollinger Band. We're probably getting a squeeze here. Yeah, I mean, this is getting pretty tight, just like we did back here. So we're either going to see a range expansion or a range breakdown. The Bollinger Band middle is actually just the 20 MA. And we're currently above the 20 MA. And so usually when you hold above the top side of the Bollinger Band during a squeeze process, it usually moves towards the side that it's above. So if it holds that 20 MA on the daily, then that usually is a good indication that we will have range expansion to the upside. And let's take a look at our, let's get rid of some of our MAs here. Make it a little bit cleaner. Okay, so we've got this lower triangle support, that's the 4 hour. We've got this top 4 hour resistance. This is the daily candle closing resistance on the top here. And again, we're just consolidating. Let's take a look at how our weekly closed. Our weekly closed, not great, a little bit neutral, a little bit bearish. We did have this nice buyback wick, but we couldn't close above the previous week's resistance back here. So this 10-4 level is again acting as a resistance on our weekly chart. So bullishness will resume once we can break and hold that to the upside. And again, this week and next week is going to take us out to the end of this support. But we do have even more consolidation that can go out till even the end of October. And like the previous analysis that I did in the beginning, the high time frame stuff, it can take us out that far because they can go 4, 5, 6 months. This is known as DefTsuo has pointed out, this is, if you're based on Wickofian logic, this is accumulation, this is participation, and this could be distribution. But Bitcoin typically does accumulation, participation, distribution, and reaccumulation. So that these are sometimes reaccumulation zones, and typically if you don't see that big sell-off rebound, then these usually indicate that somebody is possibly accumulating into these levels up here. So I am leaning towards the former than the latter, meaning I think that we will see an upside break, but I would not put it out of the realm of possibility that we see a downside break. Either way, with this level of consolidation, we should see a move, a big move. So let me go over ETH. A lot of people are asking about ETH. Okay, so we currently broke down. I thought we were going to see a little bit further of a low because we did break this super key level. It was resistance, support, support, then turned to resistance, resistance, and we flipped it as support over here, but we did break it and closed below it. But we did get these tweezer bottoms over here. Now, what I'm seeing on the hourly, I'll just draw you a picture here. I am seeing a channel that's forming here. Okay, so I'll show you kind of my thoughts. So we've got this nice channel that's forming. And then we've got like this outside channel, which are kind of like the wicks here, and then we've got the wicks down there. So what I'm seeing is if you do the channel tool, whoops, it's a little bit easier to see. So you just draw a little parallel channel here, bring it up here, and then it gives you the midline level. And this is your pivot level that you can kind of play around. You know, you can short at these levels, you can long at these levels, but it's usually this kind of back and forth as buyers and sellers find this fair. Fair value exchange. This is this is classic price action analysis, right? So you can short middle coming from the downside. If it breaks up, then you can long the retest. So what I'm looking for is a move up to maybe 194 outside here, maybe 193, 194, and then we could take a short position, and then look for maybe a retest down to 186 or even all the way down to 180. It does look like we may have a bit of a bear flag formation, but it really depends. If we can break out of this channel to the upside, form some sort of a higher low, then I'll be looking at that. But 193 to 194 should be a good short on Ethereum. I don't know if we break out into 200 like everyone else is kind of calling for. It's possible. I know a lot of people are saying that we hit the bottom on ETH when we hit the 160s level, but I still think we can get maybe one more entry at 180. So I can screenshot this and throw this in the Discord. But okay, I'm gonna go get my daughter to sleep, and I will be back. Hopefully she falls asleep quickly. Last time she took like an hour. So if not, Mr. Chinggis can take you guys with the rest of the market.
The rest of the market. All right, so go ahead. Don't be don't be scared. Don't be shy. Throw something up in the chat. Let's talk about it. We're good on Bitcoin now as far as everything we've talked about, so we don't really need to go too much further into that. Do want to just pull up dominance real quick. We mentioned it earlier, so let me just get that chart up there. All right, so what we were looking at earlier this morning was this historical zone. That's that black line right here. And that level right there is the one that propped us up before we got the bounce back. So we broke out of the falling wedge, or the rising wedge, broke out of that, came back, tried to test it, couldn't make it, held back by the median line, pushed all the way up, finally got the test, dropped down. But when you drop down, you didn't get support on structure, you got support on historical. From there, you push back up and you broke that previous resistance level again, came back, and instead of a retest, you just smashed right through it. So this became invalid up top here because that's no longer an idea. But we came back down, we found support again on that same zone. So now we're looking at sort of like a double bottom, if you want to call it, in groupings, but just want to see it. I want to see it fall back down through this level, get back into this range that we have going on for about 2 weeks. And then we could test the bottom side of this channel and see if the channel has any sort of like validity to it. And if it does, then that's great. At least we have something to look for. In the meantime, what should happen is we should start seeing a little bit more love to some of the T20 coins. And we already have, right? We saw some ETH moves. We saw some XRP moves. Litecoin hasn't really done much, but there has been a little bit of love pushed around. So it is something to just be mindful of, that these things are happening, and they happen on a 24-hour basis, right? That's just continual. All right.
We're getting some moves in the market.
Futures real quick. Let's see. So we were looking at the open over here, which was exactly the same. So
we're getting a nice push on majors right now for some reason.
Good.
Strong spike.
Very nice. All right. Well, we'll take a look in just a second. So on the actual futures chart, we're good. Why does this look different than it did like 10 seconds ago? 913, 916. All right. Well, in any event, I'm telling you, this is just different. It opened at 10,335, and now I'm showing it's a little bit different currently. So in any event, no huge big gap up or no huge big gap down. So we're okay on that for now. So we got some majors moving. So let's take a look. We already did ETH. So let's take a look at XRP.
ETH actually had a nice little 1% breakout just now.
Let's see that.
A nice up to 192.
So ETH, let's see. This is what we were looking at last night. So When we were talking about ETH, we talked about the first entry, right, being the aggressive entry down here, right? That was the push underneath after your consecutive lows that you pulled up when you got your support structure. From there, we were hoping for, or at least looking for, a retest of the falling that we didn't get, right? We kind of called that the other day. We said, if you're already this far ahead, forget about it. It's over. We're still in the third bracket. That's where we're finding resistance. So 1, 2, 3, 4, 5, 6 days resistance on that third bracket, and that's on the bigger pitchfork. So that's on this right here. So if you look at the overall move down, right, in the structure that we've formed for the actual retrace from the larger move, right? The larger move is way up over around 1400. So this is sort of like the rally back, right? You kind of capped out at a moment 364, which on the global scale was not all that impressive. But with the strength of move now is still dwindling, but we're trying to get it back. That's the difference. So if you have your local high sitting around 335, ballpark figure, so call it 350 to 365. And this is the area that we talked about pushing back. And again, we've seen this before, so we don't want to get tricked, right? We've seen the support pop in. We've seen the higher high, the higher low, the higher high, and then the big failure. So we're not looking for, we don't want to get super greedy here. We're not looking for 400. We're not looking for 1400. What we're looking for is confluence and structure, and then take each one of these brackets along with each one of these fib levels and each one of these fib and each one of these moving averages, one at a time, but enough so that we at least have momentum, trend, and volume on our sides. And if we can have those things on our sides, then we have something to at least talk about, right? 1, 2, 3, 4 days in a row, right? Volume is up, price is up. That's bullish. So when you have volume backing up the price action, that can go either way. So if your volume is up, right, and the price is going down, then that's bearish, right? It's bearish continuation because volume is increasing while the price is going down. So people are very interested in selling. It's the exact opposite here. You have the volume is going up and the price is going up. So there's no divergence there. There's no confusion, right? Volume is increasing, price is increasing, everybody's happy, everybody's buying. And if everyone's buying, that means there's more demand. If there's more demand, then you start running out of supply, and then price is going to move, right? So sellers will start getting greedy because they're like, well, I don't want to sell at 197 if I could sell at 204. I don't want to sell at 204 if I could sell at 218. I don't want to sell at 218 if I could sell at 242. Eventually it'll catch up, and then you're going to get this, where you just have a large few candles in a row that'll just sell it off. So because we don't want to be the greedy traders, we get out at points where other people may be looking to sell or pull profits, right? And then you could keep a portion in there again for later, and that's fine too. There's nothing wrong with that. As long as you book some profits and then move your stops up so that it becomes 100% profitable trade, right? That's always the goal, is that, you want to be able to create the trade so that as you pull profits, your stops are being raised and you're guaranteeing a profitable trade no matter what, as long as your stop, actually gets hit and your targets actually go through in the market. That's an entirely different story. So when we talked yesterday with the big break above, right, what did we say? We said if you miss that first entry, this is your entry zone. And what happened? We got the wick right there, right to your entry zone. So it just made it 186.67, and it looks like the low was 186.30. So really by 37 cents. But in any event, that would be entry. So now, if you miss that entry, I can't help you anymore. I'm sorry. No. If you miss that entry, we look for areas of resistance. First area of resistance is very close. 50 MA on the daily chart is a very important level, and that's 194.04. We're currently at 192.44. given the volume, given the trend, given the speed, imagine we would hit that today. Now, what kind of reaction are we going to see is going to be based off of the rest of the market. If dominance continues to drop, volume continues to rise, that puts more money back into alts. What are the alts that are going to see the love first? Probably the T20 coins. Ethereum is the number 2 coin in the slot. It would see some money. So if we do see the volume and it does increase and dominance continues to drop, then this becomes very bullish. Forget about the 50. Once you hit it, you could buy the pullback, which could be right back on a fib zone, which is this guy right here, the 618. All right, so the 618 is right that marker in between red and green right here. So it's this level sitting around 188.18. It's very possible we hit the 50 and we pull back to the 618. A little reassurance that we do definitely have support there. And if that's the case, we continue back to the upside. Upside right here, this level, right? This whole zone. Look at the confluence here, right? This is on a daily chart. So daily pushed it up, found support, right? Support, 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 big break. When you got the big break, what do we always look for? The retest right here, rejection, rejection. All right. So this is the next key level we look for on the way up. As we found resistance once there before, expect to find resistance there again. Now, of course, we've seen in the past, what was once resistance gets a massive blowback like this. You power through it, and then you come back and flip it on the top side. That's also possible. So that's why we want to play to 50, right? And then we want to look at what's next. This is the next area. So it is really close to that 50, but at the top side of that area has confluence with the 70 EMA, and you got a little wick push up to the 200 MA. I'd probably focus on the 200 MA. You take a little bit more risk because you're really entering that zone and trading through it, but the expectation is that 200 MA is either going to get hit or it's going to get front run. And that'd be another area to pull profits. Then if it continues to stay bullish, we start looking at our other levels. We always want to get back 236 and 382. We talked about that in pretty good detail last night. Pushing back through to 382, once you get over to 50, should be a no-brainer. There's really nothing in your way. A little bit of previous resistance over here, but nothing major that stands out until you get to the 100. The 100 MA is really far away. Let's be real. $229.53. That's huge. That's a big, big, big move. It's not something that Ethereum can't do. Look at the big drop it did within a few days. Could just as easily do the same thing with a rise like this, but we don't want to trade for that. You know, we don't want to expect that it's going to do a $40 move in the next 3 days. We want to play the levels because the levels make the most sense. If you pull some profits at the 50, you let it pull back, you buy back again the 618, that's fine. Push it up to the 200, play the 200 level, again, pull some profits, pull it back, add to your entry if you want, pull your stop loss up. Next target level at that point is going to be the 100. So you do have a lot of room in between there and the 100, and it could break down and fail at any moment. And if Bitcoin starts looking a little juicy, guess who's going to get the first hit? And it's probably going to be Ethereum, Litecoin, XRP, Bcash, and EOS, and probably Cardano, because they always seem to get hit first when Bitcoin does its thing. All right, so that's Ethereum, I guess, in a nutshell. So I don't see ETH anywhere. ETH USD, our buddy, I don't see him. He might be doing like Sunday night pizza in a movie with the family. So that's okay. No problem. All right, so let's see. Swing it. ETH just broke out. We're looking at ETH. It's cool. It's cool. 192.36. ETH just broke out of that zone. Out of that zone. Not yet. Oh, not yet. We're okay. Again, we're looking 194. So 194 is essentially the 50. And that's basically what we're looking for. Not looking for, there's nothing bearish about this. So I'm not looking for anything bearish. I'm looking for a hit to the 50. And then, you know, people to take profits. And if they do take profits heavily, I would like a buyback back at the 618. And the 618 would be about 188. Chill, I can't afford XRP to go any lower. Let's take a look at XRP. Good old XRP. Oh man, let's see. Coinbase. All right, so XRP. Man, this does not have a lot of history. Where's my other one? Might be. Well, it's like we're starting fresh again. I don't know where all my drawings are. Of course, I go from template to template, so things change. All right, so the bigger picture, right? The bigger picture. Let's go to the weekly here. XRP, what have you done? You know, I don't want to be the bearer of bad news, but doesn't XRP look a lot like, you know, Bitcoin at 6K that ended up doing this and this and this, and we're currently trading right there? I don't know. It just looks that way to me. But what the hell do I know? So let's see. Trend wise, what do we got going on here? Top down trend, swing fail, obvious levels. Clearly patched that one up. That's no big deal. Next level to the top side, rejection. Okay, so now we have a window frame, or at least an idea of what's shaking in that ballpark. On the south side, let's see. So south side, very similar to Bitcoin. You have this horizontal level that is, you know, essentially holding for the most part. Let's make that black. And let's make that solid. And let's make it a little darker so it's a little easier to see. There we go. So you can see, even though the wicks at this point we're making higher lows, something similar to this. Okay. We had a horizontal coming on weekly support that was sort of propping price up, irregardless of where the wicks were headed. In any event, both of those have been broken. Both. All right. So what do we always say, right? Generally speaking, right? You break a level, you come back, you flip it as a retest, and then further downside. So you broke the level, you found temporary support, push back up, find the level again, and this time you would find it and then break off of it, retest it, and then you go further downside from there. Now that's just speaking from, that's what it looks like. So, you know, we could clearly see a case where XRP wants to go further down. We'll go up in the meantime, bring it back up to 28. All right, so come back up to 28. This should be rejection, and then further downside, you know, down to like free or something similar. All right, but structure-wise, it's the same deal. You got a lower high, lower high, lower high, lower high. So you're clearly making lower highs. On the bottom side, very much like Bitcoin, right? You have on wicks, you have a low and a higher low and a higher low. This is basically a 1, 2, 3, 4. This is 5. This is like a quadruple bottom area here. But then you broke it, right? And you lost it. And once you lost it, things changed. And when things change, you know, you have to adapt or you get killed. All right. So we'll take a look at the daily from here and just see how that trend's playing out. This one right here, the local one. Let's see what that guy's doing. So I'd like to actually have a line here. I'm not sure what that's all about. Okay, so what? Okay, line. Yeah, you gonna let me draw it? No. What the hell is going on here? All right, let's Try anything else. Okay. Yeah. So that works. Very good. Let's get our line back here. Come on, guys. Line. Line. No, we're just not. That's just not going to work, is it? That works. All right. So that's just problems. What? Gotta be kidding me. All right. It's fine. Don't worry about it. We'll use array. Software doesn't want to work properly. No problem. Find something better. All right. So we did break out of our daily trend. That's this right here. Unfortunately, it's not much of a breakout. Remember, we talked about this the other day as well, right? Just meandering off to the side is not the same thing as breaking out. Breaking out would be something that's, impulsive, larger move, bullish to an extent, and then, a little bit of kickback to it, a little bit of momentum to follow. Like this would be breakout, push, good, comeback, retest, push it up again, and then rock and roll. This whole thing failed and died after you got, right back to its horizontal structure levels. But this over here is dying, right? This is a meandering breakaway that's doing nothing but creating triple tops. So we could see this level right here is clearly an area that we're struggling with on the top side, but we do have a zone that we do on the buying side. All right. So we have this little ping pong range that you could play. And you could do this XRP, you could long and short. So this is another way to trade ranged markets, right? You always long a key level of support, and you always short. You flip it short, flip it long, flip it short, flip it long, flip it short, and you can narrow these down so that you certainly get filled. And then you got to give yourself like a threshold, some sort of allowance to say like, all right, if it gets past this area, then okay, that's gonna be my time to say, okay, well, I've had enough. Range is over, and now we've clearly broken key support level, so we're headed up, or we broke a key resistance level, whatever the case may be. Now, if you keep these super tight, it doesn't work as well. That's the unfortunate part about range trading, right? If you keep it super, super tight, which is what you ideally want to do, you just may not get the same types of results that your buddy's getting. All right. But this is very simply a method that you can use when you start seeing that range is developed. And if you have range developed and you say, okay, very simple. What is going on here? Oh my God. I'm losing my mind, peoples. I'm losing my mind. All right, so that would be short level, short level, short level. And then you got long level. Long level. It's like a add tier long, I guess. Long level. Long level. All right. And then you flip, right? If you're long and short, just flip it. Just double the contracts, flip it long, flip it short, flip it long, flip it short, flip it long, flip it short. It'll be just a consecutive trade until, let's say you've determined that this is the, can I do it now? No, you're a piece of shit. Until you become invalidated. Once the ranges become invalidated, then that's a wrap. All right. So yeah, I don't want to. XRP may do wonderful things, but right now it is not painting the wonderful things picture. Sorry. I'll have to tell you. All right. Let's see. EOS probably made some moves. It was moving earlier. This is again another small chart. So on the bigger play, all right, so nothing changed here, right? Still looking for the 236 target level, right? First things first order of business. As far as structure is concerned, it's okay, right? We made a big move up, came back for the pullback, and another big move. So we're looking for 423. We're looking for 1 6, 2 6, 3 6, and a 423 as far as targets. All right, and then you look for confluence in other aspects of trading, right? So, or at least I do. So I have a couple key things here. One, well, I don't need to redraw this level of support because we've already used it, but I'm going to show you anyway how it affects everything, right? That's a key level. Key level came down, found support. Key level. All right. Support came all the way down to here. That's your wick zone, but we're not going to draw it that far because that's insanity. But you look for just confluence, right? Confluence is actually this way, was on the high side, right? So like that. So this area right here was once support, became resistance, right? Became resistance again, became support again, and then the liftoff. So we're good, right? That's support. Now you do the same thing on the high side right here. Again, support comes down, does what? Turns into resistance. What happens after that? Well, we're looking for more resistance. Why? Because there was resistance last time. So before we flip it, we want to test it for what it is. And what it is currently is resistance. Where's resistance land? Right on the 423. Where's the 423? Right here. $4.62. All right, that's target area on the whole move. At that point, you hit the 423. You're looking for trend exhaustion. If trend exhaustion sets in, then you start eyeing up your shorts. If trend exhaustion does not set in, then you start to reevaluate to the upside. Are you pushing for the 382, the 618? Are we getting to previous levels of structure? Yada, yada, yada. All right. Confluence right now on the 423 couldn't look any better. 100 daily MA sitting right here. This is perfect. 423 level 4.62, 100 MA 4.71. You already hit the 1.6. You pulled back. You got your 2.6, and you're working your way up. You got rejection at the 70 EMA right now. 1, 2, 3, 3 in a row. Break the 70. What's the next thing you're looking at? The 3.6, confluence with your 100 EMA, confluence with structure top. Okay. Where does that land you? 236. All right. So that's the next target, really. I mean, that's what you're looking at. You're looking at, you had your lower move, you had to push up, break this, come up, make the next move. If you're going to pull back, then pull back to previous structures. Right here. Okay? So if you're going to pull back, you pull back to 394 to 388. That's your buy zone. All right? By that point, you should have your 9 EMA start to come up on the daily and act as support. Right? That'd be a little touchdown, pick it up, and push it along. Your 20 is way the hell down here. So you had your 920 cross, like a week ago. So that's all bullish. Your 9 just crossed over to 50. That's all bullish. Your 20 is creeping up. It's going to take a little while for the 20 to cross the 50, but 20 over 50 is very bullish as well. So you got a lot of good things happening on EOS right here. Even a super late entry now, which I don't recommend, but a super late entry now just up to the 236, that's an 8% move. And up to the 423, it's about a 12.5. We'll call it like a 12.5% move, give or take. All right. So again, these aren't, we mentioned this last time as well. Like, these aren't the moves that'll go 60% in 30 minutes, but these have high liquidity. They move a little slower. But they do have high liquidity. You know, you can get in on an EOS trade. You can get in on an Ethereum trade. You can get in on an XRP trade. Trying to get in on you know, Atom, or get in on Win or Dusk or Dent or Ontology or Pearl can be difficult depending on the exchange. So just need to keep that in mind when you are looking at those trades. You do need to be able to get in. You do also need to be able to get out. Now, getting out for some of those trades shouldn't be a problem. Just tie it back to the you know, the BTC pair if you're going in with USD, or vice versa. You should be able to get out on a larger pair. Or if you have to, you swing that coin into another exchange and sell it there. Or even if you have to, you push it into like Shapeshift and Shapeshift it. You know what I mean? Just drop it into something else. All right, EOS is looking good. I'm ready for a 30x. Okay. Yeah. I mean, I'm not painting any pictures for a 30x move, but if you see it, that is, you know, that's cool. It's cool. 30x on a $4 asset. We could do it. It's been done before. All right, let's see. What else do we got here? What was I looking at? So Bcash is moving. Let's see. BCH, USD. Bring that on Coinbase. So we got a decent move here. Nothing like, you know, to write home about, but daily just opened. We're up $2. It's not horrific. You know, you're not like writing home about it, but it's also, you know, it's not that bad. So let's see. Let me pull up. Yeah, okay. So on the 4-hour chart, you know, because we just opened that candle up in comparison to the daily, it just doesn't look all that good. But on the hourly, because the candle's only been open for 38 minutes, you got a much better idea on what it's doing compared to previous price action. All right. So again, you look at the daily, but the daily showing you a candle in compared to other daily candles, where the hourly is the closest representative to the other previous candles, because we're 38 minutes in. I mean, it could go to the 15, but that's just too choppy. All right, let's see if I can put a trend up now. Yes, sir. All right, trend lines work. Very nice. All right, so something like that, give or take. Let's see. I mean, we kind of channel that out. I'm in ballpark, something like that. Let's see the downward action isn't really going to do us much. Little one-time support there, no big deal. Let's see, local side. I'll take this top level, bottom level. Okay. So we can see we got the 2-3, we got the 3-8, came all the way back to the 2-3, failed on the 3-8, back to the 2-3, back up to the 3-8, failed at the 5, all the way back to the 2-3, and now we're dancing around the 3-8 right now. So not the prettiest price action for an hourly chart at all. But we could take this segment by segment and see what we're doing here. So let's see. Top side came down. You had a couple fails on the way down. That's no big deal. So super local. You had something looking like that. Didn't really do much once you broke it. This is a little bit more important right here. So you got your high side move, you got your tap, fail, drop down, push up, fail across the board. So this becomes a key point of interest right here. Bring that right up to the wick. And then a higher low, push up, you made a higher high. So now you're within trend. You lost it. Now you held it. So you started a higher low here. Then you got your lower high. So on the super local side, You got that right there. All right, but then you broke this long term. You broke the local at that point. That's breakout play. So that worked out good. Big push up. You can see the resistance. Like this is what we talk about reactions. That's the reaction you had on the 382. That's a sell off. Pulling profits. Doesn't matter because people bought back in and continued up. All right. That's the same thing I'm talking about for Ethereum and EOS. You get that first level of reaction, right? Sell it, and then you're like, why not, right? Sell it at 304.53. You buy it back at 303.94, ballpark, on the 5-minute chart, this thing could have came all the way back down here. We don't know, which I would assume it came at least to here because that's your previous structure levels. Okay. So you probably come back down, tap it, right? Push back up, make a higher high. Now at this point, you're starting to fail this level. So you have to look at that and say, well, is there any historical value to that? Like look left, is that really like a big deal? Okay, when I start getting into like, that's kind of your swing high right here before the low. So that's your swing high. So let's take that and let's just be sure, right? That's your swing high. I'm going to make it a different color. All right, we'll make that like blue. All right, and then we'll just change this thing over here so that it's like all over the freaking map. Bang. Oops, wrong way. Bang. All right, and let's see if that has any confluence with our current price action. Yeah, that's the wick right there. Okay, that's your rejection. So it just becomes another area that needs to be broken. That's all. So this is like when you go through trading, right? It's just everything is just what's the next level? What's the next level? What's the next level? There is no it's over. It's never over. Right? It's just what's the next level. So here you go. You got your breakout move, breakout play, local price action. Nothing massively crazy here. A little bit of a falling wedge. It's okay. Big push up. You might get a retest, hourly chart. So yeah, your next candle might fail, drop down, come back right into this little zone right here. Then if it does, that's your buying point, push up. You're looking to break these levels clear. And then you could go back to like your 4-hour chart and say, all right, well, what are we actually looking at? Like what's price action telling us? Like what's our next key level? Probably somewhere up to the 5. So we could take a look at what that would actually mean on the daily chart. Let me get rid of this. And so back to the 5 means we got to break through our 200 NR50. Here's the golden cross that's happening right now. Golden cross is when the 50 crosses bullishly over the this is a death cross. This is the 200 crossing over the 50. So it's a death cross. Death cross, not a golden cross. So that's not good, but it's an area of confluence for the meantime. And plus, these are super lagging indicators, so you're not overly concerned about that death cross like today. You don't trade off of something like that today. Let's see. Yeah. So like that action is based off of like what happened here. And then you could get further downside for sure. But for now, you just play it as confluence, right? So confluence of MAs, you got the 200 and the 50 to deal with on the high side. So that's an area to break. See how that works out on the daily? This level right here is that level right there. Perfect. Perfect. And I bet you, well, we don't want to make it that big, but bet you there's some confluence over here. Yeah. Support. Look at all that massive support, rejection, support. So this is just structure on the way up. Area of hesitation, accumulation, comes back, flip it, proper, push it, drop it. All right. So if we look for first target zones would be sitting over here that 5,200. Next level be sitting somewhere around the 5. You could probably push that a little higher and go for something like previous structure, which would put you just above the 5, around 316. All right, at that point, now you really have to say, is it really going to have that kind of gusto? Is it really going to be able to make that kind of big move? If it does, you could plot it, but this doesn't mean it could hit the 4-2. You just want to be able to plot it because you want to know what it may look like or what confluence might be there. 4-2 on here is dropping all the way back right before a massive dump on the daily chart. It's not really a great structure level. It's not exactly a swing low, but it is close. It doesn't have that much confluence. So I want to be using this. I'd probably use something a little bit more local. But at that point on the daily, you would have broke the 200. You would have broke the 100. 100 might push up to the 2618 by the time price got there. Kind of jack this thing up a little bit. That would be good confluence, another great profit target right there. An area to take profit. 3.6, I'd probably ignore on this one as well. Yeah, so it'd end up being 4.2, but really I would probably take this swing low right here, and I'd probably take the swing high right here. Somewhere within that ballpark, as price started warming up to it, is when I'd have to start looking at some other factors and say, all right, well, it looks exhausted. It looks tired. What's the RSI doing? What's OBV doing? What's everything else telling me? If the trend is super strong, then like we said earlier in the stream, right? You're in the trend until the trend is no longer a trend, until it's invalidated. When it becomes invalidated, then it's time to start looking elsewhere. But until then, you don't necessarily need to get out of the trend. Not if it's working. You know what I mean? You do something like that. Even though I'm not a huge fan of the gap here, so there's just a lot of dead space. So really, it's so many other patterns than it is this pattern. It's really a channel, right? You had a brief falling wedge here. It's not even super pretty, but it was here for a minute. I kind of did that. And then it kind of did this. All right, a little push down, drop, break, build a channel. All right, channel push up. We can see what the pitch looks like here. That could be interesting. So you drop the pitch on, find the high, find the low. So within the heart is your center line. And then, I don't know what the technical term, I just call these brackets. I think a bracket down. These are all based off of important numbers, by the way. They're not just randomly placed there. All right. So, you have the 5, right? That's your center line. Okay. And then, a 1 essentially. So it'd be that's a 1-to-1, right? It's a full 1-to-1 from your high to your low. Right. And then if you want to put your, a 75% zone in there, you can. 618 levels if you want to do. Fibonacci's, that's fine too. 382s, right? 0.25. This is the absolute center line. I just started not using all those. And just kind of scaled it down. So I got a 1.5, which is basically 1.5 extension or 0.5 extension off of your 1-to-1. So for me, that gives me a healthy zone that I'm looking at, right? So this red zone is that's my health meter for the trend. We start dipping into that zone, and up top, if we're on an uptrend, we're getting stronger. And down here, we're getting weaker, right? That uptrend is getting weaker and weaker. Then I have a 2 that's not only a borderline, but it's sort of that's my bracket end. At that point, it's sort of if you're out of there, I kind of consider the pitchfork is dead. The trend is just about all but over, and I'm looking for other avenues to get the hell out. All right. So the pitch on here is pretty well respected, all things considered. We got the heart line is good. Rejection at the top side, support at the low side, drop into bracket 3. Bracket 3's holding. I guess bracket 1, 2. We'll call that bracket 1. And it is holding. Downside support, right? Push up, top side rejection. Now we're just kind of hovering in the middle. It's probably look a whole hell of a lot better on like a 4-hour chart, but this way at least you could sort of see the price action within. And you treat each one of these as like its own little channel. Low side, high side, low side, high side. Again, back to our ping pong range trading. When you're trading channels up or down, it's the same deal, right? You just always long support and you always short resistance. So there's no difference here. It's just that things look a little different. But all things considered, this doesn't look too bad. I would imagine continuation to the upside. I'm cool with that. Anybody have any questions, charts, anything, something to look at, something to talk about? I hate to just go on and on about Bcash when nobody's trading Bcash, but it's just something to look at because you guys are all so quiet. Jacob is currently putting the baby to sleep, so we'll see what else he wants to look at when he gets back here. We could take a look at let's see. I want to pull up. Let's do gold. Let's take a look at gold real quick. Let's do the mini futures. All right. Gold. What? This is utilities. We didn't want this. Let's see. Yeah, XAU, gold, money, gold, silver, gold, futures, gold. Why am I having? There we go. Jeez, what the hell is wrong with me? Yeah, there should be another chart. There should definitely be another chart. But it's fine. And it's fine. It's all going to give us the same information, right? Spot price on gold is spot price on gold. So that doesn't really change too much. All right, so weekly chart on gold. Some interesting stuff was happening. I wish I had my other chart because it was ridiculously marked up. This one is blank, so it kind of makes me a little sad. But that's all right. So monthly historical levels. I had this on my other chart, so I'll just sort of recreate what I had. So key monthly levels I put on here because I thought they were important. All right. Something like that, and something like that, and something like that. And then we could dive into the weekly and say, all right, what is the weekly doing? What is it respecting? What does the actual trend look like? You can see we had a key level here of resistance, almost a triple top, and then we broke that level. So this becomes a very interesting area. Oh, Jacob's back.
Yes, sir.
This becomes a very interesting area to either come back and retest or something that we're going to look at in the future on a drop. So we don't have to get super into it now, but it is something just to be mindful of, that if you break something this long, something that goes back, the better part of 4 years, then coming back and retesting it is kind of expected at that point. But high side targets we already have, and you can see based off of monthly levels, we really just missed this one. We've only just missed it, 1561 ballpark zone. But that's a healthy pullback for now. If we just take a look at our fib on the local side.
Look how clean these charts are, man. Ooh, sexy charts.
What's a sexy chart? What?
Yours is clean, man. Clean.
Oh, that's awful. I'm lost. There's so much dead space. So pullback on the local side so far, not even a 236 yet off this local move. So Further downside would be expected at least down to 1464. That'll at least get you a 2-3. That's very healthy for stocks and traditionals. They move very differently. 2-3, 3-8 for them is actually a 3-8 is a pretty deep pullback. They're not big fans of 618, 786, 886s, but we do see them from time to time, so we don't rule those out, but they're not the normal. 2-3, 3-8-2, that's pretty normal for a stock. You can see this move here already within the current move, and we'll just see what that did to get a baseline. 382 is where it found support. All right, so you're kind of looking for the same thing. 2-3 would be shallow, but we'll take it for now, and we'll have to judge on what it's actually doing. You have one area of hesitation during that drop down, and that would be kind of right where your 236 is sitting at. But overall, gold, every red flag in the book for the last 5 years has been called for a recession. It's yet to happen, so people are their mindset's all over the place. You have some people that are buying gold just a year, 2 years in advance, just because they feel their recession is coming no matter what. And you got other people that are in and out of gold day trading, because every day Trump will say something about China and the entire market will crash.
China.
The entire market will rally. So gold becomes the dumping spot for a lot of traders. It's just a very easy way. It's a very easy hedge. It's extremely liquid. There's no issue getting in or out, and it just becomes one of those things that people expect to see on the rise, or at least expect to see stable come shit hits the fan type deal. All right, so Jacob is back.
Yeah, I'll bring up. Yeah, I got basically the same gold chart. We hit the target 1540. I put that out. I don't even know, when was that? June, July? I can't remember when we talked about it, but yeah. These 8% moves don't seem like too much, but you can take options on these. So they do really well. This is the gold futures chart. And just we had before the closing, we had this massive gap up. So I expect probably to see that kind of come back down for a little gap fill. Let's take a look at what Bitcoin's got a nice little breakout going on right now. All right, so we hit that lower end of support down here. We're pushing up back to the top of the range. Brad said he was putting his baby to bed, so he wanted us to do Bitcoin again real quick. So we've got this top line resistance, 1, 2, 3, so it's a valid trend line. Got this one down here, 1, 2, 3, valid trend line. So we've got these, this support up here, this resistance up here, this lower support down here. We've also got this level here acting as the hourly resistance. So 10,450, I think, will be a decent short again. It does look like we've got an ascending triangle formation going on this little short-term time frame. So this would be my short zone for a potential retest one more time around 10,100, where we can flip long. But I would probably keep my stop really, really tight, maybe 10,473, and then so you get that nice 2-to-1 ratio. I'd keep it like that, just above this swing high candle. If you want to keep it a little bit tighter, you can even keep it above this 10,450 level. So 0.23% to 0.5%. If you're taking 10x leverage, then that's 2% risk to 4.8% risk. And then you're targeting maybe just this lower side, so 0.5% down to 1%. So you're still getting a 2.16% RR on this trade. And it's historically pretty good. It's rejected at 1, 2, 3. We did get this little scam wick up here, and that's what I'm talking about with kind of just being cautious. You see a lot of these where it just takes out those short sellers and then kind of buries the candle deeper. So on a small little time frame here, hourly, this is what I'm looking for. This is what I called out at the beginning of the stream. I was looking for a push up to around 10,450. Then a short, and hopefully we see either this support break or we see a breakout. But I think that'd be fine. And then once it starts moving, you can just set your stops to break even. But 10,450 is a tight stop, and then 10,475, 10,480 would be a little bit of a looser stop. But if you're on 10x leverage, I think that's a pretty decent trade to take, just based on kind of the market where it sits right now. Just kind of dead volume. You're seeing these kind of fake outs, fake breakouts. And then ETH did push up. We're at 193 right now. We're kind of out of that top level zone. This is, kind of where I was looking to short. Let me take a look. I'll probably wait to see if we get some sort of a hourly kind of rejection candle here before I kind of short into strength. So I want to see something that kind of looks like this, maybe like a tweezer, maybe just some sort of a sell-off, some sort of a tweezer top, anything that kind of shows me that this level is being respected as a rejection from back here. And then again, same thing, I'd be looking to target that 186, 180 level. But if it pushes through here, then I'll just look to flip that as support. We are starting to see what I wanted to go over was total 2. Oops. What we are seeing is this total 2. We've got this lower. Whoops. Is that it? No. This lower trend line right here, getting respected, and we're kind of holding that level for now. And total 2, this is the market cap minus Bitcoin. I was doing an inverse correlation analysis with Bitcoin. But we have had, just on the total alt market cap, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months of decline since June of 2019. It's been on a non-stop decline. We've got our first 3 white candles, so we could see kind of something like this where we grind. We had a really strong breakout April, and then a pretty decent end of the year 100% move off alts. But then after June, it's just been a disgusting bearish decline. And this level was previously the pop-off level back here, back in 2017. So we want to make sure that this trend line holds, definitely. And then the total market cap with Bitcoin, total market cap, if we look at the logarithmic channel here, we've got this trend line here that has not been tested this year, but we're getting closer to coming back over to this trend line and potentially bouncing off like we saw back here, all the way back since 2015. It's just been on this steady parabolic rise. And so it's possible that we come down into here and test that. So just a few things I'm watching. Bitcoin dominance. We had this rising wedge that, Bitcoin, just being Bitcoin, didn't really respect it too much. Currently, it looks like we've got a reversal candle here on the weekly. It's been just kind of meandering in the 71 to 72% level. But this is a key support now, this 70%. So even if we come down here, in order to get alt season, we need this level to break. So we need dominance to break down here. And this would be alt season for us if we got this nice retrace like we did back here in 2017. Yeah, no problem, Brad. Get your baby to bed. Okay, so any charts you guys want me to take a look at? I'll go over some that I've been watching. Hold on, let me. I'm just looking. Okay, so Zen was one that I'm watching. Another Barry Silbert classic here on the daily. It looked like we were forming a bit of a double bottom. Lower time frames. We got this nice little double bottom here. It looks like we've got sort of a bump and run style. Looks like Bitcoin, we had this nice breakout. So, I could see this thing kind of heading back up to the top side here. If you're still trading on Binance, alts have been a little iffy here and there. Obviously, you can see our take profit targets we lowered just to make sure that we were actually getting those take profit targets. So something like that. We held this level 1, 2, 3, 4. We can keep that stop pretty tight. You can look for a retest here even. Keep it even tighter, and then set our targets up here. So Zen, that was one that I was watching, and then what was another one? Let me take a look here. Got my watch list. I think Zen was the only one. EOS had a nice breakout. Can't break for some reason. This 4,000 level is kind of holding us back, which is also the 61.8 of the entire move from the bottom side to the top side. Currently testing that 61.8 level. And so I was looking for this level to get flipped. It was resistance, flipped as support, came through, worked as support, resistance. And so I was looking for a break and then a close above that. ETH BTC, we got an interesting potential inverse head and shoulders here. Here's left shoulder, here's head, come up, and then form that right shoulder. And then something like that, potential move back up to the top side. So that's what I was looking for. That's why my target level was 194 for a short. I didn't think we were just going to break it in the first shot there. Take a look at the 30-minute. Any rejection? No rejection yet. So no short yet. I want to see this get rejected first, and then I'll take a short position. Yeah. Any charts you guys want me to go? I'll be back nightly. Binance less liquid. Yeah. There's a really interesting analysis that I saw of. Let me see if I can find it. Let me see. I can't actually find it. It was basically like a liquidity chart of basically 6 months ago, May, and then as of now, and the top coin had 14,000 Bitcoin volume, and now the top coin has 400, or yeah, it's been. Let me take a look at the top volumes on Binance. KuCoin is not much better though. We might just have to stick to majors. We're finding any little trade that we can. QLC had a nice little pop here on the daily closing. Let me see. What's the volume? Yeah, the top is ETH at 2,100 Bitcoin volume. That's just so low. But Americans getting kicked off has a lot of it. The bottom 1, 2, 3. I mean, you have to go up 50 coins just to get to 10 Bitcoin daily volume. So that's just a hard market to trade. It's better just to wait till volume comes back, and it comes back pretty quick. Sometimes I have seen averaging into those really, really low volume coins, but lately they're not really holding supports. But once we see dominance start to fall a little bit, that's when we'll want to average in. Anything else you guys want to cover before we wrap up our stream? We're right at that important level right here on ETH. So if we can flip that, that'd be ideal. Yeah, no problem, Brad.
That's the 50 right now on the daily.
Oh, is it? Is that what that is? Yeah, I don't think we break that the first shot. We might get.
I don't think so. We're ahead of there right now though. 90. I think we just hit it. 194.07. We're at 194.24 on Coinbase. So we did just hit the 50. That's good, but I would sort of expect that to come back down. 618 on the local side is 188.20. So it's not a bad zone to short down to. Even further,
I think most people are long ETH too.
I would imagine now. I mean, it's been a decent week. Going back to the beginning of September, really the end of August. We had that one first move up, but it was very non-convincing. We were still in the falling wedge, rode that down for another 4 days, but then we broke the wedge. The problem is we never came back to retest the wedge, so we sort of meandered for about 6 days until we just got this latest break on the old support level, and that's that level over at 185. So once we broke 185, then it was like, all right, we'll come back, buy the 9, and push up, and now we're on day 2 of that move. But yeah, we just hit the 50. So I would imagine we come down from here at least a little bit. I would expect at least come down to the 618. That's 188. If you're gonna come down and retest structure, yeah, like 185.35, 185.08, low 185s.
Yeah, that's what I was looking for. 185, 180.
Nice.
Bitcoin's still pushing a little bit. We're up at 10,370. Seems like artificial buying here a little bit. It's kind of a weird pricing action that's going on after the weekly close. All right. Anything else you guys want me to cover before we head out for the stream? Dash USD. Let's see. Had a nice little impulse. I'm looking at Kraken here. So the weekly looks... we broke the downtrend. Looks like we flipped SR here. Let's see. Look at all our trends here. So we kind of found support on that 70.6. Currently rejected on the 61.8. I think if we can flip this level, this is the level that was key resistance before. If we can flip this level, 91, I'd feel comfortable with taking a long position there. We still have this kind of like diagonal resistance, but we did come down to the 70.6. Usually 78.6 is a little bit better, but if we can flip this 91.5, I think you'll be okay, and then just set your stop below like the swing low down here. Speaking of that, let's take a look at the USDT chart, see if there's anything that looks good. So ETH is the big mover on the end of the day there. Atom had a really nice V-bottom reversal. No real big pullback entries, up 80% in the last couple of weeks, which is pretty damn solid. Went from $2 up to 350. Retesting that previous support there. LTC. Oh, LTC is actually not looking too bad here. Got this nice ascending triangle, higher lows. Looks like we're breaking the downtrend here in a bit. That looks like we actually broke the downtrend. Depends on how you draw your wicks, I guess. Looks like we're breaking out right now. LTC is actually looking pretty decent on the USDT chart. I think if we can get above this level right here, I think we can probably take a long position on that. What are you seeing on LTC?
Yeah, same deal. That's on my other chart, but let me pull that up. It's on my dark chart. Okay. So let's see. We had the... Oh, it's not on this chart. Damn. All right. Well, that's all right. And regardless, I was looking at the same deal. We made the higher low. So we made the low, the higher low, the higher high, the higher low. So we're in trend, and then we just broke key support. So I was looking at popping in after the break and the flip of the 20. So we got the 7-9-20 flip. We got 1, 2, 3, 4, like 4 or 5 days ago. But this level right here, we haven't been able to break. So until we break that, I'm not really super interested. And that's this level here. So that's my major resistance point, which kind of spans let's say, I mean, 70, we'll call it 70.08. Yeah, 71.39 down to like 70.90. But essentially, that's the only thing I really need. I just need that to break and close above. And then from there, my first target's to 50. 50's at 77.14. So, all things considered, I think it looks pretty healthy. I'm cool with it, but it can't be rejected. So I do actually need confirmation. Like, I don't want to just jump in this. Litecoin just fails too many times. So I'd like to see just confirmation, just get above this rejection level. Rejection, 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 rejection. It'd be the same thing if we bought right now. Same thing with this coin, right? You came up all the way to 73. The whole thing was a fake out. It was all rejection. So there's no point in buying this unless it's above 73, unless you can break and close it. And then I'll buy the retest. I'll go back and I'll buy 71.50. I have no problem with that. But you can see the level is so good here. It's all support. It's all support. Flipped once for resistance. First check. Second check comes up, stays within trend. Low, high, low, higher, high. The whole area is all pulled as resistance. So now it's your last-ditch effort, right? You came back up again. You tested one more time. Slight pullback. Maintain trend. Push back up again. So break and close above that today, and then buy the retest and long it to 77.
All right, man. All right, guys. Well, thanks for tuning in. Absolutely, Damien. Enjoy Hong Kong. Hopefully the riots aren't too crazy. I don't know. I've been following along, but it's hard to get news in the U.S. They seem to be blocking that quite a bit. But that was about, what was that, 106 minutes it says. So hopefully you guys are getting value out of these. Let us know if you want us to cover anything else. And we will be doing a special training coming up this week. We'll have to pick the day that works for everybody. We're going to talk about stacking Bitcoin versus stacking US dollar and kind of how to go about figuring that out. Appreciate everybody, and we will see you guys on the next stream.